Well, hello everyone. I'm super excited to have two very good friends with us today, Kris Abdelmessih and Dave Floyd. Had the pleasure of being introduced to both of you in the last few years. You've both come to a few collective events. Kris, we had a late night of playing an options trading game with you in Lake Tahoe. I think about half the group knew what they were doing, but everybody had a blast. And every time I see you, Kris, or I see Moontower come into my inbox, I feel the urge to watch Dazed and Confused, and that is one of my all-time favorite movies. So I always thank you for that.
One
And
one one moment on that. Today is the day to watch it here because mine it's like a graduation. It's a last day of school here where we live. So my eighth grade, my nephew lives around the corner. He's an eighth grader and he graduates. So he's finishing middle school, and I'm like, that's the day you watch Dazed and Confused. Last day of middle school.
absolutely, absolutely agree. It's a classic. It's a great movie. If you haven't watched it, definitely put it on your watch list for the weekend.
Mhm.
And Dave, you were with us in London a couple of years ago where we had my memories are White Russians late night and we went to a Fulham soccer game. I should have said football just now, but too
I was
late.
just going to say football,
Yep, I rung the
and we
bell.
were
Can't unring
sitting
it.
and we were sitting pitch side.
Yes. Yeah. Yes, exactly. Well, it's good to have you both here. You both have incredible decades long trading careers, and you're both go-to resources for many things. And one thing I really appreciate about both of you is you have incredible knowledge to share, but you're also both of you are very humble. You're both very good at saying, I don't know, it's a confusing time. I'm not going to pretend to speak to that. And I think that's a great fit for the conversations that we like to have around here. So, we've got some members on the call with us. They'll jump in with some great questions for you. I've been kicking off our conversations with a few questions. I think this is going to lead to an interesting compilation down the road. So, Kris, let me start with you. What is the strongest signal on your radar right now?
Um, so I would sum it up as some sort of insanity, basically, which is that a lot of there's we're seeing some things going on, and so my focus is on options. We're seeing things in options markets that are in some cases unprecedented, and in some cases the kind of thing I haven't seen since. Well, technically, I only caught a beginning of it, but I started trading options on the floor in 2000, and I caught the tail end of a dynamic that looks very similar to what was going on in options back in 2000, which had been going on for a lot of the late 90s. Okay, let's talk about like in the options thing. One of the things that's going on right now has been the realized correlation of the index has, I mean, I'm just yesterday, I have a, I'm looking at implied, well, first of all, I'm looking at implied correlation, 3-month implied correlation, and the S&P index is basically all-time low. You're right around 10%, which means that the average cross, that's the implied average cross correlation between any single stock pairwise. You can think about it as like the pairwise correlations between any stock in the index and another stock in the index. The average correlation is implied to be only about 10%. In other words, everything is just acting idiosyncratically in the index. What this does and so, and options are being sort of priced that way. Like it has to do with the relationship between the index and the single stock options, but that relationship is very, very tight. Meaning, typically, the single stock in the basically the single stock or the index is trading very low. The index option on prices relative to the average option price in the components. So there's a big spread between them. So the index is, you can say, historically speaking, the index vol is very cheap relative to the single stocks, like historically cheap. Now, index vol in general is not super cheap as an absolute measure. If you were to like look at the VIX, you're not going to look at the VIX and say, oh, the VIX is really low right now. I mean, it's kind of like middle of the road. what that's telling us is the single stock vols are very high right now. Now, the single stock vols are very high right now, and that is not I don't think that that should be totally shocking given the absolute size of these like hellacious up moves that we've had in the last 6 to 8 weeks. And like the stuff that's going on in DRAM and the semis, like these moves have been gigantic. And what's happened is like all the bid is to the call options, and all the puts have like sort of been losing their value, like losing their value on a relative basis. Like the skew is getting very, very cheap, and the calls are, kind of going nuclear relatively. This was the dynamic. So this is now, if you people that have been around markets for like 20 years, this is like completely shocking. But if you've been around for 30 years and you saw like the end of the 90s, it's exactly how things traded in the 90s. And to me, when I look at this, it says like this is a market that looks like it's a singularity trade. It's like that's how I'm looking at the market, where it's like everything that's related to like singularity slash AGI and the idea that that's going to eat everything else is very reminiscent of the way this word internet kind of captured people's imaginations in like the late 90s. I mean, of course, it turned out to be completely correct that it was going to change the world. What it meant for actually asset like price returns is another question. But it feels like the same thing. Like it's all one trade that's happening right now, and it's not. I don't think it's irrational. Like I don't look at that and say like it's irrational. It's like saying like, hey, the world has become the options market in stocks are saying that the world is becoming very much more binary, and that is the backdrop that we're operating. That it feels to me like this is the backdrop that we're operating against. Is like the world is becoming more binary. The option prices are saying that, and the low correlation is a bit of a reflection of that, I think, because it's not just that the implied correlation is low. The actual correlations of stocks to each other in the index is also low because you basically have a handful of large cap stocks that have been growing because of the singularity trade that sort of act their own way, and like the other stocks don't necessarily have anything to do with them. And hell, for all we know, if you believe that those stocks are going to eat everything else, actually the low correlation kind of makes sense because these things it's almost like there's an anti-correlation. If you think that these big fish are going to eat all the other fish, it kind of makes sense that one would go in one direction and the other would go in the other ones would go in the other. So again, like not I don't look at this and say like, oh, it's the market is stupid. It feels like the market is not stupid and like understands what the distribution looks like. But that doesn't necessarily mean the market. That's very far call from saying like the market prices are going to be right when we look back. It's just ex ante. They're kind of operating, I think, kind of rationally. So but it's all very, very like foreign to like the last 20 years, and I think very destabilizing.
Very interesting. Dave, how about you? What's the strongest signal on your radar right now?
Well, there'll be a lot of overlays as to what Kris was saying. For me, I trade indices only, mainly S&P futures. And what I see right now is just, it's probably a function of a lot of that plumbing issue that Kris was talking about from a structural standpoint is we just have a market that's grinding, 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 grinding. Every little pullback is bought. It's very unusual, and I've been at this for about 30 years, so I have the same perspective. It is very unusual. The one thing I have learned this time around, though, is you don't try to fight it, and you do recognize that it's a market where you, at least from my perspective, I tread very carefully. It's not setting up in the ways that I would normally like it to set up because we have these very shallow pullbacks and then these grinding rallies. But at the end of the day, we're always up X amount of points, even though intraday we may have had some zigs and zags along the way. This might go out of my pay grade a little bit, but I think my understanding of it is good enough conceptually. I think a lot of what we're seeing here is kind of a feedback loop of, and Kris, interject here if you'd care to, because you might have a better way to describe this than I do. But it's my understanding is that when you have this massive influx of call buying, let's say on SPX options or SPY options, you just create this feedback loop of dealer hedging. I know the word gamma is thrown in there somewhere as well, but again, outside of my pay grade to some degree. And it just creates this grinding bid nature where even little pauses in the market get bought. You don't even get the pullbacks anymore. So that's where I see the market right now. Do I find it alarming? I might find it alarming, but again, we could be having the same conversation 6 months from now, a year from now. Probably not, but again, it could. So for me, the way I approach the markets currently is just try to keep things really close, at least in terms of the way I trade, which is index futures on an intraday basis. I'm not trying to make, I'm not trying to go for the throat and go for large intraday moves. They just don't exist. So for me, I'm reducing lot sizes, being a little bit more diligent on exits, and actually reducing trade frequency quite a bit. And that to me is how you survive these regimes, because when things do dislocate to some degree, whether it's a big dislocation or even a modest one, I can then step in and take advantage of that. And I don't want to say make up for lost ground because I'm not losing ground right now, but I'm not exactly in there, you know, making great returns because of this type of market environment. But then when that market loosens up a little bit, kind of like we did in April of 2025, then you're just like, wow, like a kid in a candy store. You're having a lot of fun in there. There's a lot of range. Right now, I'm just keeping things close. And I think at some point there'll be a little bit of a dislocation, but I don't have a clue as to when. But watching the tape day to day right now, I always walk away going, this is highly unusual. And maybe it's the new norm. I don't know, but I suspect that it's not the new norm.
Kris, do you have any
I'm
thoughts on that?
looking.
Yeah.
Sorry,
I can see you, the wheels
sorry.
turning.
I just want to add, yeah, what I'm doing here is I couldn't remember the exact numbers, so I just pulled up like it's just kind of a very low resolution chart of like the Nasdaq going back to like the 90s because I remember basically from 90 I think from like 94 to 97 or 95 to 97 the Nasdaq doubled. From 97 to 99 it doubled again. And it's I you kind of like because I wasn't in the market like at that time, I was in college in those years. It doesn't like stand out in my mind, but I remember looking this up once because somebody pointed it out, like basically how many times we multiplied in a very pretty short period of time in the late 90s. And it, I and that was again like ahead of like what was the singularity trade of that time. And so I think what Dave is saying about learning the lesson of like not fighting it is a lesson. Actually, I think it's a lot easier of a lesson now because we've seen this movie before as far as like it can continue to go higher and higher well beyond any price that anybody thinks makes any sense at all. And the other thing is I think the market is also, like options, awareness of options, understanding of options has become more common knowledge. I mean, it was a backwater 30 years ago. And today you can go and people are talking about dealer gamma on social media. So it's people understand these things more. And I think makes perfect sense to me to be like, somebody saying, you know what, I know the story. It can double again in the next 2 years. There's nothing that says it can't, and I'm not going to bet my net worth on it. But am I going to go and am I willing to go spend like 3% of my assets on call options? In case that's what happens. It's not a complete it's a pretty sensible thing to do. Yes, the price is high for the call options relatively to the last 20-year history, but given if you think that the next couple years could look like the years of the late 90s. Those options are all cheap. They're all cheap. There's not a price in the ballpark of where they're trading right now that's not cheap if you thought that that was the case. So again, like just not fighting it, but trying to figure out like how do you there's going to be an end of the line to this at some point. But how far are we from that? Nobody knows.
I'm going to power through my questions because I'm eager to let the members jump in on this conversation.
Mhm.
Knowing how both of you operate, I think I have a hunch what your answer to the next question is going to be, but let's just find out. Dave, is there a hill that you'll die on?
Yeah, it's probably not in the context of maybe the way you're asking it, but for me, it goes back to process.
Mm,
If I know my process, I'll die there, because that's what keeps me in the game.
it's a great answer, and we've heard something similar before, so I wonder how common that's going to be. Chris, how about you?
Yeah, I don't. My answer would be like sort of similar. It's like the as far as it's funny. These are times right now where it's very tempting to look over, to somebody's backyard, your neighbor's backyard, and be like, maybe I should just do what they're doing because if you it feels like having very little, being very, very, very risk tolerant has been wildly, life-changingly profitable for people that are kind of like willing to throw caution to the wind and like and also for better or worse, I'm cursed with like understanding the value of diversification. And diversification is like, what's that saying? It's like it's always admitting that you're wrong is effectively what that feels like. And I think it's really tempting to just be like, my God, I should just do what other people are doing because there are people that are like compounding at insane rates of capital around me. And the problem is I know that if I tried to just mimic what they were doing, the moment things got bad, I would then be off balance entirely because I would be, how would I, now what do I do? If I outsource what I should be doing, then when things turn around, I'm going to really be lost. And so I can't put myself in that situation.
Yeah. Weirdly, do you guys remember when Top Chef was really popular? Like early days, it was this like hit of a show. It makes me think of this chef that everybody loved. Everyone was rooting for her. She was doing great. And then the competition where she got knocked out is where she listened to a different chef who recommended she added like an egg yolk at the very end. And you could see her struggling with it. And she's like, I don't know, I would never normally, that's not my style. And it literally like cost
Mm.
her the competition. And I literally have never forgotten that because she did exactly what you're both basically describing is kind of like turning on her own conviction and instincts, and it cost her the whole thing. And she's still famous now, decades later, so I'm sure she's fine. But yeah, it's
Shannon,
interesting.
I was gonna say, Shannon, my wife, and Yin sent me she sent me Leopold's returns yesterday. She like texted me. She goes,
Oh
can't you do a little
God.
bit about what this guy's doing? And I'm like, yeah, what happens if he doesn't tell me how to get out? Like,
That's so great.
when he changes his mind, how am I gonna know?
Exactly. Okay,
No.
you're both very well read, as is I think everyone on this call. So I'm always interested. What's something you read or listened to, watched, maybe a podcast recently that's kind of stuck with you, or maybe has you rethinking anything?
Mm.
Could be industry or
Well,
non-industry, by the way, could
yeah.
be your disconnection moment. You watched a great movie that you are recommending to people right now.
I read a ton of stuff. My nightstand's a testament to that. However, and I think and I didn't plan it this way, but oddly enough, it landed in my Kindle inbox yesterday. But I think the book that I'm about to mention is symbolic of where we're at in the market. And it's the new book by Theo Baker, How to Rule the World. And I started reading it yesterday, and I'm just constantly swiping page after page. My wife and I were at the Stanford campus back in March. We were on our way to Southern California or to Central Coast of California, and we'd never been to the Stanford campus before, and we were blown away. so different than any other college campus we'd been to. And now I'm reading this book and I'm like, oh, well, this all kind of starts to make sense now. So for me, that book, not only is it extremely interesting, there's a historical parallel as far as I'm concerned. And if in fact what is being stated in the book is true, which I have no reason to doubt, or at least with the majority of it, it kind of might point to just a general systematic rot that could easily find its way into asset prices at some point. I'm not saying that would happen, but I just find it funny that that book's coming out at a time when both Kris and I are sitting here going, this is a very odd market. There's a lot of things happening which could be potentially very true. Yet at the same time, we both are going to stick to our process because the minute you jump ship, you're usually the top tick, as we used to say on the desk. And I'm not going to top tick this market because I've lived and learned. So that to me, that book right now is just like, wow, this could be kind of the cornerstone of where we're at in the ecosystem and the environment right now.
Yeah, absolutely. How about you, Kris?
Yeah, so I have one tactical one and then one like and only because Dave said because of Dave's answer right now. The non-tactical one I have is interesting. I'm going we have a big family trip coming up. I'm going to Rome next Saturday and I've never been there and we're going to go to Florence and stuff and the so I was listening to a history podcast about Florence and about the Medicis and and it was interesting as I'm listening to the story of sort of how Cosimo Medici like had like consolidated his power in Florence and like sort of the ruthlessness and the dealing and all the politics and intrigue that we might associate with like periods like this. It had made me think about how the intrigue that I think was probably more subtle, hidden from the public eye over the last, for most of my life. And I think that right now, where you have, to watch the administration, like the administration's behavior feels like it's a throwback to me to like the way the world kind of always was. Like as far as like power does as power does kind of thing. And you're seeing and there is real data points about this, like effectively like the gutting of the CFTC, the neutering of the SEC, how many of you may know who Dave Nadig is. He's like an autistic level follower of what's going on and like the regulatory personnel and all that stuff. And so it is interesting where if you are in a world where like the markets are not quite what they seem because there's people's got their thumbs on the scale, a lot of what we might know will probably needs to be updated in ways. And what does that mean for portfolio management? What does that mean for how we interpret the tape? I think really casts a lot of questions about like the world we kind of trained and worked in versus like where it could be going. And maybe this Theo Baker book makes me kind of want to, now you're just describing it, makes me want to read it. The other one I would just say is about the tactical one was I heard the PTJ on Invest Like the Best. The line that stuck with me in there was how if you look at issuance for the last several years, it's been net negative, meaning that stock companies have been like retiring shares, buying back, and net issuance has been going down at a tune of about 3 to 4% per year, which is effectively given a tailwind to asset prices because given even if your demand were fixed, which is the economy's actually been growing, but if your savings were fixed, that would itself would lead to a tailwind if you were retiring shares. But he was talking about SpaceX and the all the IPOs that are upcoming actually would be flipping the math, and you would go into a net issuance situation of about 3% per year. Now, I'm not really sure how those elasticities work. Like, what is 3%? How does that? What do you think that means for sort of like market impact? I have no idea, but it did resonate with me because just to show my colors on what I think about prices is I think people focus a lot on like we can talk about valuation as sort of the consensus, the fulcrum of what sets a price, but really at the end of the day, I think it's most likely something that looks a lot more like flows in terms of like how much savings are there every year, what is the propensity to save, how much issuance or assets, bonds, stocks, real estate is there to buy, and the price is just like balancing the flow between these two forces at the end of the day. And we can make up stories about things like valuation and how they relate to that. But at the end of the day, if there's a lot of savings that need to be allocated and not that many things to buy, those things are just going to go up in price. And whether that's goods or whether that's assets, I think that's largely true. So the PTJ thing sort of really resonated with me. And then if once you, I'll just tell people go listen to the first 30 minutes of the episode that came out yesterday of Rupert Mitchell on The Compound. That's Josh Brown's podcast. But it's interesting because he steps through the SpaceX math and, where are we going to, $86 billion of stock has to hit the market, has to get absorbed in day one. And he talks about how you can start to break out the allocation of that 86 billion and what the residual is going to be. And it's interesting because it feels to me like it's on a gross basis probably like net negative for the market because it has to absorb all this, because it's a lot of issuance at once. But then what's more interesting could be like under the hood, if you need to rebound, some of this, so there's going to be shares sold to be able to buy these shares. And the question is like, what shares do you think people are going to sell in order to buy this? Who's most likely, like, I mean, my gut instinct is like the things that have went up the most would probably be the things you would sell. So maybe tactically there's like a short run Momo reversion trade that could be available to people to look at prices. And it's interesting because with put prices being relatively depressed, it's like the options market might be giving you that thing. And the thing that gives me pause, of course, is like if it's my gut reaction is this and it's kind of obvious to me, then like I'm like, well, it's probably obvious to everybody. And so like maybe if the SpaceX IPO wasn't coming up, the Momo stocks would actually be even higher. So like I can double talk myself to anything, but just putting it on people's radar that that this is like an unprecedented level of flow that has to come into the market. And if you listen, Rupert Mitchell's much more educated on this, so good listen. It's a good listen.
That's a good rec. Dave, you want to jump in? Any reactions?
Well, I think it's actually going to segue into your next question that I was going to answer it in that way. But I think what Kris is really touching upon is something that want to get, I want to get my hands around more and more often. And that is kind of the plumbing and the structure of the market so that you can kind of have a narrative. And I think that's a very different conclusion to arrive at than saying that stock is cheap or that option's cheap or that's expensive. Because what opened my eyes to this whole idea was years ago when Mike Green floated the idea of the challenge of all the passive flows coming in and the problems that it could create and obviously the opportunities. That really got me thinking about the wall of money, whether the wall of money is moving in, moving out, where is it moving? So I think to answer your question more directly, I think it's a really beneficial thing to be able to understand the best we can what the plumbing is, or what the plumbing of the market is at any given point in time, maybe what the structure is that impacts the plumbing. And Kris mentioned, if we have net issuance going down, but the economy is growing, well, then we have a dearth of supply. Therefore, that's just going to create a net bid for stocks. I mean, those types of larger connecting dots, they may not make a big difference on a day-to-day basis, but when you get those temporary dislocations in the market, rather than you thinking, oh, this is the beginning of some sort of a downtrend, you're like, nah, structurally things look good. This is a price level where the market has respected before. Now I have something a little bit more to lean on than just simply a static price level that in and of itself may not mean a whole lot. So I like that overall idea that Kris floated out there. And I think that's the one thing that I want to get better at is understanding that so that you're keeping yourself in the context of what the current market is, even if you're a short-term trader like me, or obviously more, even if you're a longer-term portfolio manager, that's equally as important, if not more so.
Yeah, that's a great answer. And so I'll ask you the second part of it then, Dave, so you can kind of close the full loop. Who's
Hmm.
someone you'd most want to sit down with to kind of fill in those blanks and understand it better? And it doesn't have to be a specific person, it could be
Yeah.
just descriptive.
Well, I think largely speaking, I think it would be someone who's operating at a very high level in the derivative space. And the reason I say that is it goes back to that answer. It seems to me, and again, I could be wrong here, but it appears to me that a lot of the options volume, the massive options volume we see now, is definitely impacting the structure and the plumbing of the market. Again, maybe there's not more to it than what I've already ascertained, but I would love to be able to understand and sit with a group of people or an individual for several weeks to understand how they read what's coming in and what the knock-on effects are. Because that's how I think I could sharpen my edge. So if you wanted to grant me a magic wish, that's what it would be. I'd love to sit down with a peer at that level and just be able to pick their brain because I think that would be incredibly insightful.
I'd love to grant that wish. I'm going to get to work on that for you.
I really appreciate that.
Well, I'll throw the full question out there, Kris, and then we'll let everybody join us conversation. So the question is, what is something that you don't understand but would like to, and who ideally would you sit down with to try to figure it out?
Yeah, it's going to be a similar answer to David, a little broader, but it's actually just like you want. I would love to know what Jane Street and HRT are. It's essentially obviously like the details of what it's just like what in general, like I tend to think, so when it comes to like Jane Street, I would tend to think like, well, I know this just from like having spoken to guys that are in uh derivative seats at firms like that they will tell me that things are very different than the way it was even 5, 6 years ago because of the role of retail is basically money raining from the sky. I mean, we can see everyone's seen the numbers that these companies are putting up, but retail's embrace of trading, gambling, and speculating has led to an absolute bonanza for these trading firms. But that's a little bit too lower resolution because I do think their tools have changed, and I think that a lot of I would just be very interested to know like how they think about the markets today. I think it's even probably different than the way I did most of my career. I think there's been a lot of change very, very recently. So that's one thing. The other topic, and I will say that I would like to talk about or like to learn more about is just broadly is tokenization. Just because it's something that I feel like it's going to be very, very important. It feels to me like there is a lot of capital going into the space of perps, hyper liquid sort of being like the front of that story. And it feels like it's this space that is could be very, very important to the financial plumbing, to how we think about like in 20 years from now, markets could be completely different in the way we engage with them. And and I feel just completely behind on the topic. Like I don't know what's going on there, and I'm almost like, geez, do I need to know about this stuff? And that just feels like a lot of FOMO for me.
I'm really glad you said that, Kris, because I recently met someone who is kind of leading the charge and understands tokenization. And he happens to be a really cool guy too. I think actually, no, the more I think about it, the more I really want to introduce you to. So maybe our next call, I'll just chat with him. He's a super interesting guy, so I think I can check that box for sure.